It's not unusual to listen to amateur investors claim that they exchange help and resistance. To be sure, it's common to listen just about any deal or claim that they alternate help and resistance, SAR. So I assume we can take it without any consideration that just about everyone is trading SAR and accept that reality at face value. There is a problem with that declaration, though if each person has been trading SAR, that's among the simplest mini trading strategies, how come we are nevertheless faced with and without a doubt outrageous failure fee amongst investors? As you may assume, I am a dyed-in-the-wool help and resistance dealer, and it's far very powerful for me. Of direction I am, given that we determined in the first paragraph that everybody traded SAR. There is, but, the problem of trading methodology as it pertains to support resistance and understanding when charged motion is going to transport through our cautiously plotted strains and when fee motion is going to jump off our carefully plotted strains. I regularly ask humans how they determine which role to take while straight motion procedures are. As you would possibly assume, that is wherein the communication gets or chunk muddled, and I get to concentrate to a huge sort of far-fetched buying and selling methods, lots of which I've now not heard of, at the same time as each dealer swears that their unique technique is the only and most effective way to approach SAR buying and selling. At this point, I want to say that in case your style of buying and selling is operating properly, then forget about anything that I might have to say. On the other hand, a brief perusal of tradingschools.org shows 70 or so trading room critiques, and there are most effective 2 or 3 public traders that can virtually verify their buying and selling outcomes. Most well-known buyers' skills are strictly word of mouth or inflated earnings claims plastered across their internet site. And guess what? They all exchange help and resistance. Yikes, what is an excellent manner to exchange SAR? Since mini buying and selling is a zero-sum game, it stands to motive that elevated volume at SAR will cause a reversal of that factor as traders circulate from long positions to brief positions or brief positions to long positions. On the alternative hand, if extent remains low, there may be an excessive chance that the fee movement will continue through your rate stage to better or decrease SAR degrees. In essence, to change at SAR correctly, you want to recognize volume as something greater than a panel on your buying and selling chart that has varying tiers of contract purchase sell orders. That's in which order waft evaluation is terribly available. I can watch settlement by contract, both facets of the agreement fill up with orders. If charge action goes to break through our fee degree, most of the orders will pile up at the purchase aspect in case you are buying and selling resistance. The exact opposite is true if you are trading aid. I can also watch the extent rise on an ordinary quantity chart. A regular volume chart works pretty nicely, but watching every character agreement in the manner wherein they stack up on both the bid-ask side, as is the case with order drift evaluation, is far greater accuracy and resonates with my trading fashion at more comprehensive degree. Said shortly, it just makes a greater feel to me. This is a frustrating article to jot down due to the fact I sense like I could cross on for 40 or greater pages and now not repeat myself. My hope is that I have paid your hobby, and you may look into the connection between order drift analysis, extent, and fee. It's an investment on the way to pay terrific dividends.